Hello, in today's video we'll be taking a look at the Tuesday, April 14th, 2026 trading session. We'll be looking at two different charts, one for the S&P 500 E-mini futures, and then we'll also be looking at the NASDAQ NQ E-mini futures. So this video is going to be a lot shorter than our typical video. We're not going to go into all the different aspects of this indicator. There is a link in the description of this video that you can go to that has the features and setup guide for the futures CFD's daily key levels V 3.0 indicator. So if you're interested in knowing more about this particular indicator, you can either look at some of the other futures session videos that we've had previous to this in the last couple of weeks that are on the futures playlist, or you can also look at the video, which is the features and setup video for this indicator, which has various chapters in it, so you don't have to watch the whole thing. You can simply skip to different chapters by simply looking at the YouTube description of that video and going to the specific chapters that you want to look at. Okay, so in today's session we have a true gap up. So what that means is a technical gap up is just going to be where the open of the 9:30 RTH session is opening above yesterday's RTH session high, which is this YDH level. However, a true gap is where the entire pre-market range, the pre-market low to pre-market high, that entire range is all above yesterday's RTH session high, which occurs between 9:30 and 4 p.m. Eastern New York time. Okay, as you can see here, we have the 9:30 a.m. opening bull bear key price level alert here for a bullish entry. We're utilizing our day trading GPS ribbon indicator. This is a new ribbon indicator that we came out with. It's primarily for use on indexes. However, it can also be used on regular symbols such as futures or cryptocurrencies, stocks, ETFs, etc. So this particular indicator has a filter for indexes because they're subject to extreme gap up and gap downs because they don't trade in the overnight session or the pre-market. They open up at 9:30, and so this filter compensates for those substantial gaps as far as the look of the ribbon and where it is calculating from. So when you're using this particular ribbon indicator on something that does trade continuously, such as S&P 500 futures or NASDAQ futures, or something that does trade in the pre-market for several hours, such as SPY, QQQ, or a stock like Tesla or Nvidia, or for example, if you're trading Bitcoin or other cryptocurrencies which trade 24/7, then you can just use it on the regular mode. However, when you're using it on something like SPX or NDX, you're trying to trade SPX options, NDX options, Russell 2000 options, Dow Jones options, etc., US indices options, and you can turn on this filter, which will filter out the substantial gaps and give you more of a true reading of what the ribbon actually is. You can also turn on this filter for other symbols as well that do trade in the pre-market and overnight if you want to get a dual look, if you want to get a dual screen look of what it looks like with the filter turned on and then with the filter turned off. That's also one advantage of this is you can do a dual screen with the filter on and filter off and then make an assessment based on both versions of the ribbon from that. Okay, so in the futures daily key levels V 3.0 indicator, there is a 9:30 a.m. BBKPL alert. So that is going to be down here in the user control panel. Enable 9:30 BBKPL 9:30 a.m. opening candle close alert. 9:30 a.m. opening candle close above or close below alert. Apply range filter. So this acceptable range filter is a percentage of one standard base key level, the distance from the BBKPL to R1 or S1. The default of 85% means it will only fire if price closes on that opening candle within 85% of one standard level from the crossed level. Now, this range filter is also available to apply to all the other alerts on all of the other key levels. So you have crossed and closed above alerts for the BBKPL. This is for the rest of the session. This is for the 9:30 a.m. opening candle only for whatever chart time frame you're on. This alert here under enable crossed and closed above alerts would be for the rest of the session for the BBKPL outside of the 9:30 a.m. opening candle. And then, of course, you have the R1 through R6, S1 through S6, and all the 5 contextual levels. Pre-market high, pre-market low, yesterday's high, yesterday's low, and yesterday's close of the RT8 session. And then these are, of course, for today's pre-market session. And then you have the same thing for crossed and closed below alerts. And you can individually decide which alerts you would like to apply the range filter to. This range filter, you can set it higher. We would not recommend that you set it higher. You can set it lower if you prefer to have a lower range filter. That's fine, but you should definitely not set it higher. What that means is that 85% of the distance between the BBKPL and R1 and the BBKPL and S1. You can also see that's the same distance between R1 and R2 and S1 and S2. So what it actually means is 85% of one base key level, which is equivalent to what the distance is here to here and then here to here, or between S1 and S2 or R1 and R2. So if you apply the range filter to anything above R2 or below S2, it's still going to be 85% of the base key level, not this key level difference between S2 and S3, which, as you can see, is a lot more than what it is on these other ones. So when you're using this indicator, you just have to keep that in mind. And the reason for that is when you get further out, there's more risk against the stop losses that you're using when the levels are more spaced out. So the range filter still keeps it applying at 85% or whatever level that you have it set to make sure that the candle is not too extended on these levels above R2 or below S2. Okay, so in the case of this candle, this 9:30 a.m. opening candle, we have a close above, but we just don't use the sole close above for the entry. We're also looking for confluence with the ribbon indicator. So confluence with the ribbon indicator means that the entire ribbon, in the case of a bullish entry, also has to be all green. Preferably that it's also starting to slightly pull away on the upper bands. If this ribbon was partially green on the candle close, when this candle closes, if on the candle close the ribbon was partially red and partially green, then that would be no trade. If the ribbon happens to be all red, okay, on a close above, and if this was all red, then there would still be no trade as it would negate this close above. So you're looking for confluence on close above a key level, and what a key level means with this indicator is either the bull bear key price level, any one of the R1 through R6 levels, which are the default R levels, or the S1 through S6 levels, which are the default S levels. The midpoint levels and QL levels serve completely different purposes. They're not for taking trades off of. So you have the bull bear key price level, the R1 through R6, and the S1 through S6. And you also have these contextual levels, the YDL, the YDC, the YDH, the PML, and the PMH that you can also take trades off of. So the same rule would apply on trades from those levels as well. So for example, if you did not take this trade and you were instead waiting for another opportunity, then you could take a trade on this close above the PMH level here because the ribbon is all green as well. Now we don't have the uh, cross and close above alert turned on for the PMH level. Everyone is different. I find it easier in my trading just to leave the 9:30 a.m. BBKPL alert on, and with the ribbon there as confluence, I can simply eyeball if it's a close above. I don't necessarily need to have the crossed and closed above alert on or the crossed and closed below alert on because I'm not waiting to get an alert on my phone or something to see, to pay attention. So I'm actually looking at the screen. I trade from a desktop, not a phone. So everyone's different. So if you prefer having the alerts on as well, that's fine as well. Like I said, every trader is different. So the same thing works on a cross below. Now, on a cross below, if you're having a candle close below, if this was the reverse here and we had a candle close below, we had a 9:30 a.m. BBKPL level alert that was a red label, and this ribbon was all red and not multicolored on that candle close. Then instead we would be looking at a bearish trade. And again, on that, it's the same thing. You're looking for confluence of candle close above or below a key level. Again, key levels are the contextual levels or the BBKPL or the R1 through R6 or S1 through S6. Now, on most days, most of your price action on S&P 500 futures and NASDAQ NQ futures is going to be primarily contained within R2 through S2 on about 80% of the sessions. The other 20% of the sessions, whether there's major news out, there's some big news event, there's some Fed meeting that is going on, or there's some kind of major earnings that were released. That is one of the big stocks that controls the NASDAQ 100, or is one of the top 5 stocks that takes up a big percentage of the S&P 500, or the NASDAQ 100 and has blowout earnings, or perhaps it has earnings that are crashing the market because they were bad earnings. Some sort of news event, or it could just be a technical sell-off or technical volatility that's happening. But in the other 20%, you might see sessions that go above R3 or S3, and then in extreme situations such as the COVID pandemic and 2007, 2008 meltdown, in other situations you may see it go up even above R6 or below S6 in extreme volatility situations for certain periods of time. In those kinds of situations, this indicator also goes up to R10 and all the way down to S10. So if we ever have extreme volatility that exceeds S6 or R6, you can simply turn on levels 7, 8, 9, and 10 for those particular sessions. But that's why the default is basically 6, because 6 levels is probably going to take up about 98% of sessions that you'll see in most years. Again, unless we're going through some COVID pandemic type thing or market meltdown like we had in 2007, 2008, where we saw several weeks or in some cases a few months of extreme volatility. Okay, so I've showed you that. Let me just show you real quickly the PMH, PML, YDH, YDC, and YDL levels. You have a separate section in the control panel for those. Come down, stop loss, and take profit for these levels here, these contextual levels. So you have a bullish entry, stop loss, and take profit section for each one of those 5 levels, followed by a bearish entry, stop loss, and take profit levels. So here's an example. If you were taking a bullish entry off of the PMH pre-market high like we were talking about, you select either standard or tight stop loss. You enable that by checking it, and then you can also enable the take profit, which is the standard is reward risk multipliers 2, which would be $2 of reward for each dollar of risk on the stop loss based on the stop loss, how far it is away from the specific level. This goes down in 0.25 increments all the way down to 0.25 for those that like to do risk rewards that are less than 2. For those that like to do risk rewards of more than 2, it goes up in 0.25 increments all the way up to 30. All right, so we have our confluence here with the ribbon. So we have our entry here. The ask price on the close of this 9:30 a.m. candle, we're on a 2-minute chart, 69.4350. So with this indicator, there are a couple of different types of trades that you can do. There's 2 different kinds of scalp trades. One is going to be a micro scalp and the other is a regular scalp. A micro scalp, well, first off, a regular scalp is going to be a 1-level move in your favor. A 1-level move in your favor is going to be calculated from the level that you're basing the trade on, in this case, the bull bear key price level. And we're looking up since it's a bullish trade, and 1 full key level up is the R1. So that is going to be your 1-level move for a scalp only exit. The difference between a regular scalp and a micro scalp is a micro scalp, you're targeting one of these contextual levels that happens to be in the pathway before you get to the 1-level move. In this case, in this particular session, only the PMH is in the pathway of going to the 1-level move. You also want to make sure that this contextual level is far enough away from the entry to justify the reward risk. Because in this case, in taking a bullish trade off of the BBKPL level, your tight stop loss, if you prefer to use a tight stop loss, is going to be the QL level below the BBKPL. So that's this level here. All of the QL levels below each level are the bullish tight stop loss. So basically, go into this indicator here. You can turn on all the QL levels if you want. They're not all turned on by default. You can turn on and then set your own default setting for what you prefer. But basically, if you're looking for bullish trades, you can simply go down and check which ones that you prefer to have on for the particular levels that you are normally trading, if you're whatever levels you're normally trading besides the BBKPL that are main key levels. Again, if you're trading the contextual levels, you just use that section and select the tight stop loss, and then it will print the stop loss and display it on the chart along with the take profit for the contextual level. You can do the same thing with the QL above. The QL above is going to be your tight stop loss on any bearish trade from any main key level. So, for example, if you had a bearish trade from R1, QL above R1 would be your tight stop loss. The standard stop loss on this trade is going to be the first midpoint below the level that you're basing the trade on. So that would be this mid BBKPL S1. Same thing in reverse on bearish trades. On bearish trades, for example, if you took a bearish trade off of R1, your tight stop loss, of course, as we said, would be the QL level above, and then your standard stop loss, if you prefer that, is the first midpoint level above. So going back to the point I was making on the micro scalp, you just want to make sure that this candle close is far enough away to justify the risk on here. So in this case, it's just about right at the edge of being worthwhile. If this candle close was, say, closer up here, then it would not be worthwhile, and there would be no other contextual level in the pathway to R1. So then R1 would just be your only scalp exit. There would be no micro scalp alternative. Okay, so 69.4350. If we are taking the micro scalp, 69.4950. So that is a $300 profit when it hits this. So basically, on your exits, you're basically setting your sell to close out the position, at the exact level. Now on futures, since we're not dealing with options and we have more precise entries and exits, you can set it 1 or 2 ticks above or 1 or 2 ticks below. That's up to traders' preference and traders' choice of how they like to conduct their trading. Some traders like to get out right before a key level. Some like to see if they can get a little wick through it or close through it. In the case of futures, you want to just either make it the exact level on the exit or put in your order at the exact level, or make it just 1 to 2 ticks above or 1 to 2 ticks below. Okay, so the hit of the PMH level happens here on the 9:34 a.m. candle. So that's a very quick trade on that. It's just a $300 profit on that, but nevertheless, it's a pretty quick trade. Here you have the hit of the R1 level for the 1 level regular scalp, 1014, and that is the 69.6975. That is a profit per any contract of $1,312.50. Next up, we have a hit of the mid R1, R2 level, 69.84, occurring at 11.24. Now on this hit, this is now the minimum required threshold for what we call a regular day trade. A regular day trade differs from a microscalp and a scalp in that on a regular day trade, not only is the target further away, in this case, the minimum target is 1.5 levels. So we have, again, calculating it from the level that we're taking the trade from. Look in the direction of the trade, we have 1 level, next mid-level up, that's 1.5 levels. The other difference besides that, the other differences are you have several options as to what to do with your position once it reaches that 1.5 level move in your favor. One of them is, of course, just simply exiting all of your position, 100% of your position, just like with the scalp, except it's going to result in more profit. The other alternative is to keep your entire position, but adjust your stop loss to either break even or break even plus a profit buffer. The amount of profit buffer is going to vary per trader. It really just depends on trader's choice as to what type of profit buffer to add on, especially if you're going to be holding the entire position. If you're holding the entire position, you probably want to be a little more careful with the profit buffer. You probably, if you're not going to take any, if you're not going to sell to close the majority of your position and just keep runners, and you're going to simply adjust your stop loss and keep your entire position, then you do at least a moderate one, which might be moving it, as an example, to the PMH level. Therefore, if all of a sudden price started collapsing, which nowadays you just have to be very cognizant because of the fact that because of the Iran war, because of what's going on with oil, because of what's going on a lot of different fronts right now, there can be news flashes that can come out that can severely affect the market and cause rapid price movements in either direction. So you really just can't take anything for granted. So it's good to be cognizant of that and also be cautious in the way that you're managing your trades, especially now with what is going on. So if you are going to adjust your stop loss and keep your entire original position once it hits the 1.5 level move in your favor, then you at least at that point are going to be moving your stop loss to break even the executed price that you paid. In this case, you can start looking at other levels here to move it to. So on this level here, you could move it to either the R1 level, the mid BBKPL R1 level, or the PMH. Or some people just like to do a certain amount of ticks rather than moving it to a different price level. So if you're that kind of person, then you could just say add on 4 ticks or add on 8 ticks or 12 ticks or 10 ticks or what have you. The other options that you have once a regular day trade hits the 1.5 minimum threshold move in your favor are if you are trading multiple contracts. So this would apply as an example. Not everyone has the account size to trade multiple E-mini regular contracts, but many people have the account size where they can trade micros. So if you're on MES, the micro ES, and let's say you're trading 10 micros instead of one E-mini, one regular E-mini, you're trading 10 micros, just as an example. And this same thing would apply if you're trading multiple regular E-minis, but not everyone has the account size to do that. So let's say if you're trading 10 micros, once it hits the 1.5 level move in your favor, then what you want to do if you want to instead go for this alternative option is you would exit and sell to close 60 to 90% of your position once it hits the 1.5 level minimum threshold move. And then on the remaining runner position, you would adjust your stop loss to at least break even or break even plus a profit buffer on the remaining position. And then what you're looking for at that point is you're looking for continuing moves in your favor to other key levels. Continuing moves to other key levels once you've hit the 1.5 level move in your favor are as follows. So another main key level, in this case the R2, another midpoint level above, or any contextual level above. Of course, in today's session, there are no contextual levels that occur after this level. So then you'd just be looking at other key levels. So if price kept moving up, you could turn on mid R3, R4, and so your next waypoint would be R2, then mid R2, R3, and then R3, and then R4. Then at each one of these moves, as it hits these levels, you can decide, depending on how many runners you have left, to either exit all the remaining runners, further adjust the stop loss on all the remaining runners, or do a combination of taking off and closing out some of the remaining runners, and then on the ones that you're leaving, either further adjust the stop loss on that, and then make another decision should price continue to move in your favor. Now there's also a second, well, before we go on to that, okay, so the mid R1, R2 is 69.84. So at that level, at the mid R1, R2 level, that is a profit of $1,725 per regular E-mini contract. Now, if you were trading 10 micros, it would be the same because the 10 micros is going to be the same as one regular E-mini. You're just going to potentially have, depending on your broker, more commission costs, depending on what kind of plan you're under with the 10 micros. But in any event, the other minimum threshold for a regular trade is what's called the minimum ideal threshold, and that is a 2-level move in your favor. So in practice, when using this indicator, you can decide through practice whether you prefer using the 1.5 level move threshold or the 2-level move ideal threshold. The reason it's called the 2-level move ideal threshold is because, like we said earlier, on most sessions, about 80% of the sessions that you'll see in a normal year, a 2-level move extension from the BBKPL in both directions, so from R2 down to S2, is going to be the extent of the moves that you'll see for those particular symbols NQ and ES in about 80% of the sessions. Of course, there will be some sessions where we'll have complete chop the entire session. We'll have compressed volatility. And so there will be some sessions, as an example, where we will struggle to even get out of R1 or below S1. And those do happen. And then there's also going to be aberrations where we'll go above R3 or below S3 and then extend beyond that. But in about 80% of the sessions, you're going to see 1.5 level to 2-level moves maximum in about 80% of the sessions in a normal year. So that is the reason why those are the thresholds for the minimum trade. Now, the two-level move also includes not just an extension from the BBKPL level, but you also have to think of it in these terms. So let's say if price had gone down and was turning around and the ribbon was green now and we had a close above S2 curling back up and we had a close above S2 and the ribbon is completely green as well on that candle close. Well, then we're looking for a move of S2 to S1 for just a regular scalp, or to mid BBKPL S1 for a minimum 1.5 level move, or a 2-level move back up to the BBKPL. And the same thing in reverse. You could have a move from R2. Let's say that uh, you were playing the R2 back down, then a 2-level move would be back down to the BBKPL, and then anything beyond that would be beyond a 2-level move. But price is normally contained within the R2 to S2 range on 80% or so of the sessions in a regular year. Obviously, if we're in an irregular year where we're having some sort of financial meltdown, um, like we had with Lehman Brothers that one year where we had the whole Lehman Brothers fiasco, or the COVID pandemic year or whatever, there are years where that's not going to apply because of what exactly is happening with the market overall. But in most normal years, then that's what you're looking at. Okay, so R2 is a little covered up here by this, so we'll just go back in and move this back. You can move these labels around with this indicator. They're all done by groups here, so we'll just move it a little further back. As far as the main line label. Okay, so now we can see that. 69.98.25, that's also down here in this table. So it hits that level here, basically at the 1222 to 1226 range here. Had a couple of wick hits. Here's where it actually hits it on the body, but we had a wick hit here. So 69.28, 69.98.25, that is $2,737.50 profit per E-mini contract. Now, another thing you can keep in mind is that once it's hit the R2 or S2 level, if you took the trade from the BBKPL, whether it was a bearish trade from the BBKPL down to S2 or went up to R2, that's pretty much knowing that 80% of the sessions, that's going to be the max in 80% of the sessions. No one really knows in any given session. There could be news that comes out. Trump says the war is completely over. They reached a deal. All of a sudden, now it moves up to R6 in probably 5 minutes. Or some bombing resumes or something happens in the negative, then we could go down 100 points in 5 minutes. So you never really know what exactly could happen, especially with the way the news is at the moment. If none of this stuff was going on with the continuing war and everything, you could be a little more assured of that. With this particular situation, you don't really have that kind of confidence that you can just look at this as, there's no real news that's going to potentially come out. So the point I was getting to is that once you get to R2, even if you have runners, probably a good time to exit all of them in most sessions. You could leave one with a tighter stop loss if you wanted to see if something does happen between now and the end of the day. And then what's going to happen is you're either just going to be taken out of your top stop loss on that last final remaining runner. You already got your profit on all the other contracts previously. And now you just have one final remaining runner to see if anything might happen explosive to the upside in this particular bullish trade. Now, if you were in the other sort of situation like we talked about, where you had a curl back up from an S2 as an example, the range in most days R2 through S2. Okay, so you could, from S2 all the way up to R2 is 4 key levels. So in that situation, it could be different. What we're talking about as far as the extent is R2 to S2. Now, taking a bullish trade from R2 or taking a bullish trade from S1 on a curl up, and if the ribbon was all green on the close above, that's a little bit different scenario because, again, the boundaries in most cases are going to be R2 to S2. Okay, now we'll take a look at the NQ chart. Okay, so now we're on the NASDAQ E-mini futures. Same situation in this case. The NASDAQ is trading pretty much in lockstep with the ES today. It does that on a lot of sessions. There are some sessions where that is not the case, so you can't always rely on that. Same situation though, we have the 9:30 a.m. BBKPL close above. It's within the acceptable range, so the alert is firing. We also have the green ribbon. It's all green, it's not multicolored, and it's not red, so that is the confluence of this entry. The tight stop loss again on this trade, taken from the BBKPL, a bullish trade. Tight stop loss, if you prefer that, is the QL level below, whereas the standard stop loss is going to be the first midpoint level below the level you're taking the trade from, in this case, this level here. Now, as you can see here, the close of this candle is a lot closer. So this candle is a little more extended than the ES candle was on the same 2-minute chart. It is close to the PMH level. However, we'll just go through the micro scalp trade just to show you what that would be as well. The entry on the ask of the 9:30 a.m. candle close, again, we're on a 2-minute chart, 25,709.25. The PMH level is 25,723. So that is going to be NQ is $20 a point on the regular E-minis. So that's going to be a profit of $270 per E-mini contract, or if you were trading 10 micros. Okay, so here we also have the R1 level. That's our regular scalp, 25,803.50. It hits that level here, 1028. When it hits that level, that is $1,875 profit per E-mini contract. Here on this candle here, on the 11:42 a.m. candle, we have this wicked above, hit the mid R1, R2, 25,866.75. That is now a profit of $3,150 per NQ E-mini contract, or if you were trading 10 micros. Again, same situation, minimum 1.5 level move trade. Or you could wait to the 2-level move to do one of the options that we discussed earlier. 25,930, it's a little covered up here. We're not going to move them again this time. 25,930 is the R2 level. As you can see here, it wicks up and hits that level here at 1226. When they hit at that level, and that is $4,415 per NQ E-mini contract, or if you had 10 micros, that would be the same. Okay, so as I mentioned in the beginning of this video, there are links to the futures, CFDs, daily key levels V3.0 features and setup video, as well as some other previous session videos. I would, if you are interested in this indicator, I'd recommend you go watch the features and setup video. Again, it does have chapters broken down in the description of that video. So you don't have to watch the entire thing if you don't want to. You can just simply skip to whatever chapters are of interest to you. One thing I do want to mention is we are having a big sale this week. It started earlier in the week. You may have seen our two YouTube shorts that we did on it. One is for our daily key levels indicators on just buying the individual daily key levels indicators. They're on sale now with the promo code for that was explained in that big sale that we were having. If you use the promo code that is in that particular video, we'll also put the promo code in the description of this video as well. But lifetime access on this indicator is with that promo code $499. The ribbon indicator is not included with the daily key levels indicator. It is additional. If you want to purchase that, we'll also have links to that in the description of this video. There are some free ribbon indicators also on TradingView, so you don't necessarily have to use this ribbon. Like we said earlier, this ribbon does have some advantages to it because you can use it on multiple instruments, including indexes, as it does have the filter that we talked about for indexes. And this will also work on non-indexes as well with the filter, so you can have a dual screen look where you have one ribbon with the filter on and one ribbon with the filter off, if that is your preference. And that's something you can't do with the other ones that are on TradingView. We also are having a sale on our key level suite. Now the key level suite is even further discounted. It has a discount of over $1,100. It's on sale for $875, and that is for lifetime access on all 5 of our daily key levels indicators. So when you consider one is on sale for just $499, now you're getting all 5 for $875 for lifetime access. So that would be the key level suite. The key level suite is this indicator, the future CFD's daily key levels V3.0. It's also the stocks ETFs daily key levels V3.0. So if you like to trade SPY, QQQ, IWN, Tesla, NVIDIA, so if you like to trade major stocks on U.S. exchanges and also ETFs, that would be the indicator for that. Works exactly the same as this indicator. It does have a couple of additional features that are specific to stocks because you can also use it on lower price stocks. So if you're the kind of trader that likes to trade what we call bottle rocket stocks, the stocks that are in the news that are from $1 to $10, that have a chance to go parabolic on any given day. So if you've been around trading long enough, you probably have seen that. In the news, there'll be certain stocks every now and then in the news that go from $2 to $20 or $30 or even more and have these parabolic moves. So that particular stocks ETFs indicator does have some additional features specific to stocks for those types of parabolic moves. So I'm not going to go into that now, but that is one difference between this indicator. Other than that, it has all the same features as this indicator. Also, the SPX index daily key levels V3.0, the NASDAQ NDX daily key levels 3.0, and then we have our our Forex crypto daily key levels indicator that is for trading Forex currency pairs like Euro, USD, USD, JPY, and the other major Forex currency pairs, as well as trading cryptocurrencies. So that's $875. That's on sale now. Save over $1,100, get lifetime access to all 5 daily key levels indicators. Okay, so if you did like this video, I'd appreciate it if you could hit the like button. That helps us with the YouTube algorithm and helps our channel grow, so I'd appreciate that. If you could take a moment to hit the like button if you did enjoy the video. If you would like to subscribe to our channel, then you'll be notified if you do subscribe when we post videos on different trading topics or post session videos on any of our trading indicators. So again, thank you for taking the time for watching this video today, and we wish you much prosperity in all your future trading. Also, if you're wondering how these indicators are working for people that have purchased them, you can go to daytradinggps.com, click on any of the indicators, and you can see the reviews and trader feedback from people who have bought the indicators and used them on a daily basis. Thank you.